Let's get started.
Okay. Thanks, Jeremy. Again, I'm Thomas Dunn, as Jeremy has just introduced, and we'll be sharing with you some information about disability, trying to make you aware because it is Disability Awareness Month, the month of May. Somebody out there has declared that. I'm not sure who, but we are participating with that. And we just like to be able to bring you some good information that you'll be able to use and make some intelligent decisions in your financial planning. So let's just get started. Again, we've already introduced myself here, Thomas Dunn. Give me a call if you have any questions. If they're not answered today, I'll definitely give you a call back and try to respond as quickly as possible. But anyway, as I mentioned, this is our Disability Awareness series, and we will be addressing other topics later in the month. But right now, we just want to get to the basics. And one of the first things we're going to talk about during the day is your most valuable asset. Sometimes, we're not quite aware of what it is. So we're going to try and define that and identify it for you. And what are the risks of losing that valuable assets? And also, we're going to share with you some strategies on how to avoid the losses. Because after all, that's what we're about here, is keeping you safe and avoiding all the losses we can. So with our first statement, what is your most valuable asset? Well, I ask that to a lot of people, and a lot of times the first answer comes up is the home. After all, that is the most expensive item that we purchase usually, and it does represent a high value of assets in our portfolios. Another asset we see come up is 401ks. If you've been in a 401k participating for a number of years, you might be surprised how much money you have in there. There are some people that probably are millionaires because of what's in that account there alone. So that's definitely a valuable asset. Other people regard their businesses as their most valuable asset, their way of making a living. Or investment property sometimes can be regarded as the most valuable asset. I don't know if you ever heard of the book about the millionaire next door, but quite a few people you'd be surprised today that might be worth $1 million or more based on investments. However, what we feel is the most important asset you have is actually walking around in your shoes every day, and that is your ability to earn an income, that you're able to get up each morning, do whatever it is you do, that creates an income stream coming into your family unit. It's almost like you're a money machine, and you're turning the crank on that machine every day, and it's printing out money for you to be able to live your lifestyle that you've created for yourself. So, once we've established that as the most valuable, how do we know what it's worth? It's always good to establish a value when you're looking to protect something. You have to know what it's worth. Just like we know what your car's worth, we know how much the insurance will cost, how much your house is worth, how much your life is worth for life insurance purchases. So we have to put a number on this. And if you'll notice here that as Social Security normal retirement age keeps on increasing, myself right now, I'm age 66 is my normal retirement age. More and more people are working, pushing age 70 now and beyond. So we're typically using age 70 as the working lifespan of most people. And that's what we're going to predicate a lot of our numbers today on. We have a little worksheet that you can download hopefully from our website. And what this does, it just basically gives you a chart that you can go and pick out a monthly income at the top of the chart, follow your age over here, and it will show you if you work till age 70, this is the amount of income you will earn. This does not, of course, assume raises over that amount of time, so this is actually a very minimal estimate of what that figure might be. You'll notice down here at the bottom section, there's a place that you can put in the value of your home, the value of your car, how much money you're spending on that. It might be surprised to compare how much you're spending on these other assets to protect their loss and compare that to what you're doing to protect your most valuable asset. So let's proceed on, and as a little bit of information here, I'm going to be referring back to, I'm just taking a case study here of a typical family. Husband and wife are both age 40. Husband's earning $70,000 gross income. Mom is a stay-at-home mother, and they have a child who's 10 years old. Their net spendable family income under a standard filing is going to end up being a net of $56,000 of spendable income. So if we take the 70,000 gross income, take it out to age 70, you're looking at a $2.1 million asset. And again, that's assuming no increases in pay. So we know we have a lot more value here than actually what we're even looking at now. I dare say that a lot of people out there never thought they had a $2 million asset, but a lot of people do, and even more. So why is that income so important? Why is that cash flow we get every year so important? Well, it presents the foundation of your lifestyle. Now, if you've ever had any sales training, which some of you may have, there are some corny sales stories that you're usually told to present to help prove your point. This is one of those corny sales stories we're getting ready to go through here, but I think it drives the point home in a very simplistic way, and I like simple. But when you first start out, you get your job, you're earning money. That's the bottom block, because that's going to be the basis of everything we build upon. So once we have that income stream, one of the first things we need in life is we need shelter. We need a home. We need somewhere to get out of the rain. We need somewhere to sleep at night and have our meals. So very basic need here as we go up the ladder. So everybody, once they start earning money, they're going to buy a home or rent a place to live. Now, are you going to have insurance on that? More than likely, yes. If you're buying a home, the mortgage carrier is going to require it. If you're renting, then it's certainly prudent and affordable to have your belongings insured as a renter. Next thing you start accumulating is personal property. Now, this is everything that's inside the walls of your home. In other words, your furniture, your clothes, your stereos, your cameras, your phones, your computers, everything, your boat outside, your cars, everything that's a piece of personal property. And once again, do you have that insured? Usually you do. Usually if you have insurance on your home or your condo or your apartment, then that usually includes coverage on your personal property. If you have some items of very high value, you might find out that you've got them itemized and scheduled for a specific amount of coverage. So we do have those insured. Once you got your personal property accumulated, now you've got disposable income to start investing or just saving. Are those going to be insured? Well, once again, probably a lot of them are. If you're putting money in the bank, you've got FDIC insurance, you've got guarantees. Certain investments with insurance carriers will be guaranteed by the insurance companies. In other words, annuities, cash value life insurance, and there are other forms of protection even on other exotic investments. So what I'd like to share with you now is a hypothetical situation. Once we've built our little house here, our house of blocks, we've got our lifestyle going. Let's assume we don't have insurance on any of the things I just mentioned, and they're taken away from us. Let's say, for instance, our savings and investments are now gone. They lost all their value. Well, guess what? Because you've still got your ability to earn money, you can replace those investments at some point in time. Let's say, at some reason, your personal property, uninsured, is all lost. Once again, if you still got your earnings down here, you can replace that also. Matter of fact, even if your house burns down and you don't have insurance, if you got earnings left over, you still got that ability to get up every morning. It's going to be a steeper hill to climb, but you could even replace that also. However, if you lose this bottom block down here, we're looking at some very difficult times ahead. So let's just take your earnings away. Surprised you, didn't I? You thought that once I took the bottom block off, all of these were going to fall on their own. Well, it doesn't quite happen that way. It's more systematic. Once you find yourself with no income, you've got to start paying bills. Where's the first place you're going to go? To the most liquid thing you own, and that is your savings and investment typically, and you're going to start invading that and spending it down. If you're unfortunate enough to be disabled long enough that you lose all of that, the next proposition is not very attractive. Your personal property now is probably going to need to go up for sale. You've all seen an estate sale advertised somewhere, and you always know what the people are expecting when they go there. They get something for nothing. So if we're down to the point of putting our personal property up for sale, we're in dire straits. And once again, if this just continues to go, we are hitting disaster. And obviously we don't want that to happen to you or anyone else. Now, one of the things that we really like to focus on here at Friedman Associates is making sure our clients get the right and complete and accurate information. We believe that every individual deserves the right to have complete and accurate information so that they can make an intelligent decision on what their financial futures will be. So we'd like to just talk about a few things here. I'd like to share a phrase with you. 5 or 6 years ago, I was being coached by one of our industry coaches, and I still converse with him now. He posed this question to me, and it kind of turned my thinking around on a lot of what I've been doing over my career. And that is, if what you thought was true about something turned out not to be true, when would you want to know about it? Probably yesterday, because we just don't want to be making decisions based on incomplete and inaccurate information. And this one from Mark Twain, I love it. It ain't what you know that gets you into trouble. It ain't what you don't know that gets you into trouble. It's what you know for sure that just ain't so. And how true that is. We cannot know what we don't know. So we're going to try and get some myths out of the way about disability coverage. One of the first ones we hear quite a bit, Social Security or workers' compensation is going to cover me. Well, the reality is that Social Security only covers total disability. And quite frankly, most people suffer total disability for a while and then they go into a partial disability situation for a longer period of time. So if you're ever partially disabled, you can't get Social Security benefits at all. And if you're totally disabled, they are hard to get. Matter of fact, you've seen it on TV, the lawyers advertising will help you get them. 65% of the initial applications in 2009 were denied. So you can see it takes sometimes multiple submissions to try and get your Social Security benefits, and you really have to be disabled really bad to meet their definition. 2010, the average monthly benefit was $1,065. With our family of 3 that we looked at back there, I doubt you can even feed them on that much money per month, much less provide a home and other niceties. Less than 10% of all disabilities are work-related. So once again, the thing about workers' compensation taking over, more than likely that's not going to be available to you. Myth number 2. Hey, I work in an office, white-collar guy. I'm very unlikely to get injured, so I'm probably not going to face a problem being disabled. Well, 90% of all disabilities are caused by illnesses, not injuries, again, contrary to public opinion. So it's the diabetes, it's the heart problems, it's the strokes. Those are the things that are causing people to stay home and not be able to work. Less than 10%, as we saw on the previous slide, less than 10% are work-related anyway, so you can forget about that typically. My group coverage will support me. Well, although group coverage is very important, and we definitely encourage it, and we incorporate it in our planning, most group plans are going to cover 60% of your gross income at the maximum. Now, that's not all that bad, but usually what comes along with employer plans, if they're providing the benefits for you, they're usually going to be taxable to you. So if we reduce your income by 40% and we subject that 40% to taxation, your net spendable income is going to be cut in half if all you're relying on is your employer-provided disability coverage. And more than likely, if you do have an employer plan, it's typically only short-term coverage. Usually starts quickly, usually only lasts maybe 26 weeks. That's the typical short-term plan we see out in the marketplace. So group coverage is not the answer. And plus, if you move from one company to another, you can't take that with you. This is the one I like. This is the one that I use to make my excuses for not covering my disability predicament. But anyway, myth number 4 is a general skepticism. It won't happen to me. I hear this from people for this situation, and of course, premature death. It ain't going to happen to me. It's happening to somebody else. I see their names every week in the obituary column in the newspaper. It's kind of unfortunate that we don't publish the number of people who've become disabled. You'd be very shocked to see that information published in the newspaper. But let's compare becoming disabled to what other things might befall us that we typically have insurance coverage on. Well, over the next year, only 1 in 335 housing units will be damaged by fire. And we've already seen, more than likely, you've got insurance on that situation. Only 1 in 160 people will be injured in an auto accident. You keep those auto premiums paid on time? We're sure we do, because we definitely don't want to live without that. And only 1 in 117 will die over the next year. And once again, I'm sure you like to keep those life insurance premiums up to date too, just in case that happens. But look at here, over the next 12 months, if you're between the ages of 25 and 64, 1 in 10% are going to suffer a disability over the next 12 months. And that's a disability that is lasting at least 90 days to meet the survey. So you can see everything else, we've got a low incidence of likelihood, but we've got insurance on that. The one thing we've got a high likelihood, and the most devastating for us to lose, we typically allow that to go uncovered. Now, a lot of people ask, how's it expensive to make this coverage go in place? Well, I'm going to express it this way. Let's say you're coming to work for me, and I'm going to offer you 2 forms of compensation. Package A, you're going to come to work for me, and I'm going to pay you $70,000 a year as long as you're healthy and working. No problem. You coming in every day, you're getting the 70 grand. However, if you're totally disabled, I'm not going to pay anything. If you become what we call catastrophically disabled, and what we mean by that is you're unable to do 2 of the activities of daily living. These are things like unable to bathe yourself, unable to go to the bathroom by yourself, unable to feed yourself. If you're in this situation, it is like catastrophic, as it says, situation for you. And even if you get that bad, we're not going to pay anything. However, I've got a package B over here that might look more attractive to you. And that is if you'll accept a little bit less of income while you're healthy and working, $67,435, just about 3.5% less than what we were going to pay you here. If you become totally disabled, we're going to pay you $45,600 a year. And that's not going to be taxable to you the way we're going to set this up. So, not a bad deal. Now, here's the other kicker. If you become catastrophically disabled, and this means you really can't do anything for yourself pretty much, we're going to pay you $69,996. That's almost 100% replacement of your income that you had as a healthy working person. So, our protection plan in this situation, going to pay you 65% of your income tax-free if you're totally disabled. We'll pay you a percentage of that if you are partially disabled. And if you are catastrophically disabled, we're going to replace pretty much your full income. And so as you see here, the difference in salary, well, basically, that's what the insurance premium is. It's 3.6 of your income, and you probably pay at least that amount to protect your car or home. I know I do when I look at my premium amounts. So that's a very simple way of expressing it. I would think that most people, if they're faced with this situation and this choice, they would be selecting package B over here. Makes a lot of sense to me. Now, what do we need to do next? Well, one of the things that you need to do is to identify all the expenses that need to be paid while you're not working. These things are going to continue. They're not going to stop. You've got rent, mortgage, utilities, food, medical insurance. Matter of fact, we find that most people experience an increase in household expenses while they're disabled. There could be items that are not covered by your medical insurance that you have to spend on. There might be extra needs to make the house suitable for you to maintain any type of livable lifestyle. So we typically find that expenses don't stay the same and they don't go down, they usually go up. So you need to identify what those are before we even start to figure out how we're going to protect it. You also need to identify the sources of money available to pay those expenses. You're going to have some investment accounts, savings accounts, life insurance, cash values perhaps, retirement fund money. If you get to this situation, you're going to be looking for any source of money that is available to you. So we want to take into consideration what you have available, and we want to put that into our plan for you. We want you to confirm any benefits you have through your employer. If you've got short-term, long-term benefits, if you've got availability to enroll in a voluntary disability plan and pay for it yourself, we want to know what those benefits are and be able to incorporate them in your planning and recommend, how you incorporate those. Another thing a lot of people don't realize is you need to check loan accounts for disability waiver of payment features. When you bought your car and you got your loan, the bank probably offered you, if you add X amount of dollars to your monthly payment, we will waive your car payment if you become disabled. Pretty much any loan account that you get will probably give you the offer of buying some disability coverage for that specific loan account. If you have loan accounts that we will not need to be paying while you're disabled because they have this waiver benefit, we need to know about that so we don't overinsure you on the insurance side. So last thing we need to do is that we will offer you a no-cost consultation and design a personalized protection plan just to meet your needs. In other words, each person has different needs, different thoughts, different attitudes, different risk tolerances. And we try to discover all of those things about our clients and make sure that this is really for you and no one else. So that kind of gets us through. As Jeremy said, we were trying to keep this to about 20-25 minutes or so. We don't want people to run too long and leave the presentation, but we're going to display our contact information right now. And as Jeremy said, if you have any questions, you can email us. That is mine, as Jeremy's email, and our assistant Jenny Cox is on there too. You can contact us through any of those, or you can just call us and have a direct conversation with us, or call and set up a time you like to come in and just have a no obligation meeting, and we can answer all your questions, try to dispel all your fears. So that's about it, Jeremy.
Yeah, we'll have some additional information throughout the month on the Facebook page. So if you're watching us on Facebook, this is the place to get some additional information. There'll be some videos. There are some already posted on our page. There's some links and so forth, and we'll continue to add those as the month goes on. You can contact us through the Facebook page as well. Many different ways to contact us. The easiest way, of course, is to pick up the phone and call Thomas, and he'll answer any questions that you have, concerns that you have, and be happy to sit down with you and discuss your needs with you.
All right, Jeremy. Now, we also plan maybe next week or the week after, we also will be addressing, for all you business owners out there, there's quite a few unique problems that business owners will incur as far as potential losses are concerned. And once again, we can show you how to get around and cover those losses so they won't happen to you and cause catastrophic situation. All right, Jeremy, that's about it for me.
Yeah, also I want to point out disabilitycanhappen.org is a great resource. There's a lot of information on there. You can look over some of the statistics on disability. You can read some of the stories of people that really could have used disability insurance and suffered some medical problems, accidents, unforeseen things that happened that disability insurance really would have helped them out in their financial struggles as a result of just unfortunate things happen. And as Thomas pointed out, that can be anything. I mean, there's stories about people that a woman got struck in her driveway by a car. Another woman got rear-ended by a car in an automobile accident and as a result had some nerve damage. There was a otherwise healthy 48-year-old man that just had a stroke and could not basically continue in his job the way he performed before. So in that case, he did have disability insurance and was able to take early retirement and not suffer too much financially. Everything was pretty much taken care of because he got involved in a group plan with his employer. So if you have it, great. There's some people that just wish they would have looked into it a little bit closer, and that's one of the things that people why they don't have it is because they don't know anything about it and haven't looked into it. So hope this is giving you some information that you can use and maybe base a decision on protecting yourself better for the future.
Let me give you a couple of numbers as we close here, Jeremy. We've mentioned a lot of statistics today, percentages this, percentages that. There's only two numbers that mean anything. If it doesn't happen to you, it's a 0% chance. If it does happen to you, it's 100%. And that's all that matters. What are you going to do if it happens?
Right.
Thanks, Jeremy.
All right, for our viewers, we thank you for joining us today. If you're joining us at a later date, of course, will be up on our Facebook page, so you may be watching us over the weekend or sometime next week, which is fine. It is great that you are able to watch that at your convenience. If you do have any questions, I'm going to put the screen back up here one more time. These are the contact phone numbers. For the main office, you can just call in and ask for Thomas. He's probably your best person to contact, and he'll get right back to you if he's not available in the office. You can leave a voicemail over the weekend if you'd like to set up an appointment, and we'd be happy to talk to you. If this has gotten you thinking a little bit more about disability in your future, then certainly something you should look into. So, like I said, we appreciate you taking the time today, and we look forward to doing more presentations for you in the future. So with that, we'll close it out, and thank you so much for watching today.
Thank you.